Get ready because the news cycle is absolutely wild right now, and we've got the most critical updates you need to know. From massive investment potentials to groundbreaking industry shifts, the world is moving at lightning speed, and you're about to get the inside scoop. We're diving deep into the stories that are shaping our future, and trust us, you do not want to miss this. Stick around, because what we're about to break down could change everything. Let's get into it. First up, we're talking about investments and a look back at one of the biggest names in tech. And speaking of massive tech players, we're shifting gears to explore a major shakeup in the streaming universe. A beloved franchise is gearing up for a significant expansion, and they've just brought in a key executive to lead the charge. Get ready for some serious interstellar developments. Now, let's talk about how you create. If you're a writer, a creator, or anyone who works with text, this next piece of news is for you. We're diving into a powerful update for a widely used tool that could revolutionize your workflow. Prepare to have your productivity boosted. Finally, for all the investors out there looking to get in on the action without the direct risk, we've got a smart strategy. We're breaking down how you can gain exposure to a tech giant's future growth through a clever, diversified approach. Don't go anywhere. Make sure you're subscribed and have that notification bell on so you never miss a beat. Investment Rewind. Did Apple stock deliver? Wondering if your money could have grown with the tech titan? For years, Apple has been synonymous with groundbreaking innovation and stellar stock performance, often serving as the benchmark for growth stocks in the market. However, the current year has presented a different narrative for the tech giant, with its stock experiencing a downturn. As of August 27th, Apple's stock price had seen a decline of approximately 5.5% for the year. While this might seem concerning, it's crucial to zoom out and consider the broader 5-year performance to truly gauge its impact on an investor's portfolio. If you had placed a $1,000 bet on Apple stock 5 years ago, your investment would have blossomed into roughly $1,830 today. Including the dividends reinvested, that figure would rise to approximately $1,870. This performance, while not unimpressive, doesn't quite match the expectations many have for one of the world's most successful companies. What's even more striking is how this compares to the broader market. For instance, if that same $1,000 had been invested in the S&P 500 during the same 5-year period, your investment would have yielded around $1,870, or a more substantial $2,015 when factoring in dividends. A significant portion of the S&P 500's impressive growth can be attributed to the performance of the so-called Magnificent Seven stocks, a group that notably includes Apple and the recent surge of excitement surrounding artificial intelligence. It appears that Apple, despite its dominant market position, has been slower to capitalize on the AI revolution compared to its peers. Companies such as NVIDIA, Microsoft, Alphabet, and Amazon have already showcased tangible advancements and practical applications of AI. Apple, in contrast, has yet to present concrete AI solutions that have captured the market's attention. While the company has pledged to increase its investments in AI development to bridge this gap, the market remains cautious, awaiting tangible proof of Apple's AI strategy. This measured approach isn't entirely out of character for Apple, a company known for its meticulous process of refining new technologies before their public release. However, if Apple can successfully reignite its innovative spirit and deliver compelling AI-driven products and services in the coming years, the next 5 years could very well surpass the performance of the past 5. But how does this compare to other tech giants, and what does it mean for the future of innovation? We're about to explore a major strategic move by a beloved sci-fi franchise that could redefine its universe. Star Trek's new mission, expanding the universe. A key executive hire signals a bold new direction for the iconic franchise. Paramount Plus is making a significant push to bolster its original content library, and a recent high-profile hire signals a clear intent to expand its most popular franchises. Chris Parnell, formerly a creative executive at Apple TV Plus and co-president of Sony Pictures TV Studios, has joined Paramount Plus as executive vice president of originals. In this pivotal role, Parnell will report to Jane Weissman, the the head of originals at Paramount Plus, and his division will operate under the oversight of Cindy Holland, Paramount's chair of direct-to-consumer. This strategic appointment underscores Paramount Plus' commitment to growing its slate of original programming with a particular focus on genre content. Parnell, known for his extensive experience in developing compelling drama series, has also overseen numerous successful comedy projects throughout his career. Notably, he previously collaborated with acclaimed Star Trek veteran Ron Moore on Apple TV+'s critically lauded science fiction drama, For All Mankind. While it's too early to pinpoint specific projects Parnell will spearhead, it's widely anticipated that his involvement will significantly boost the expansion of the Star Trek universe. Paramount, fresh off its merger with Skydance, has explicitly stated its intention to make the Star Trek franchise an absolute priority. Deadline reports that Parnell is a well-respected executive with a genuine passion for comic books, genre storytelling, and all things geek culture. This enthusiasm is expected to be a major asset as he works to further develop Paramount's intellectual property, especially the Star Trek franchise. Currently, Paramount Plus features 2 original Star Trek series: Star Trek, Starfleet Academy, slated for a 2026 debut, and Star Trek, Strange New Worlds, which is currently airing its 3rd season and is expected to conclude with its 5th season. The franchise has seen varied success in recent years. Star Trek Discovery, which concluded its 5-season run in 2025, was praised for its high production values and serialized narrative but drew criticism for its action-heavy focus. Other recent entries like Star Trek Picard, Star Trek Lower Decks, and Star Trek Prodigy have garnered different levels of audience reception. Prodigy, aimed at a younger demographic, was surprisingly lauded for its deep storytelling, while Lower Decks, an animated parody, faced challenges with its animation style, leading to lower viewership and eventual cancellation. With only 2 Star Trek series currently on the horizon, Parnell faces the exciting challenge of quickly establishing new flagship series to ensure the franchise's continued growth and relevance in the competitive streaming landscape. But how does this strategic content push translate to your daily tools? We're about to explore a powerful update to a writing tool that could fundamentally change your creative process. Apple Notes embraces Markdown for enhanced writing. An essential update in iOS 26 brings a powerful text formatting tool directly into your notes. Apple's Notes app consistently receives valuable upgrades with each new iOS release, and iOS 26 is no exception. Among the various enhancements introduced, the Notes app now offers significantly improved compatibility with Markdown, a versatile text formatting language, thanks to the integration of import and export functionalities. This development is particularly exciting for content creators, writers, developers, and anyone who relies on plain text formatting for their work. Markdown, created by John Gruber, is a lightweight markup language that allows users to format plain text documents using a simple syntax. This syntax enables the creation of headings, links, bulleted and numbered lists, bold and italic text, and more, all within a plain text file. The true power of Markdown lies in its ability to be easily converted into other formats, such as HTML or rich text, making it an indispensable tool for web content creation and digital publishing. Despite its growing popularity and widespread adoption across various professional fields over the years, Apple Notes had historically lacked native support for Markdown. This meant users had to rely on third-party applications or cumbersome workarounds to import or export Markdown files. However, with the advent of iOS 26, Apple Notes has finally bridged this gap, allowing users to seamlessly import and export text using the Markdown format. The import process can be accomplished through 2 convenient methods within the Notes app. Exporting is equally straightforward, initiated from within an existing note via the Share sheet. Simply select the new Export as Markdown option, and your note will be converted and ready for sharing or further use. This new capability transforms Apple Notes into a viable platform for writing in Markdown. While the in-app styling of Markdown text won't be visually rendered within the Notes app itself, the formatting is preserved and becomes apparent once the note is exported. This means you can import existing Markdown files into Notes, and crucially, they will retain their important formatting, including headings, links, and other structural elements, throughout the import process. This integration streamlines the workflow for Markdown users, allowing for greater flexibility and convenience in managing their written content directly on their Apple devices. But what if you want to invest in this tech giant without the direct market volatility? We're diving into smart ways to get exposure to a major player through diversified investment vehicles. Smart investing, gaining Apple stock exposure through ETFs. Diversify your portfolio and mitigate risk by investing in Apple through exchange-traded funds. The future trajectory of tech giant Apple, AAPL, appears robust, with the company strategically focusing on its high-margin services sector, which includes Apple Music, Apple Pay, and Apple TV+. These services now contribute nearly 30% of Apple's total revenue, demonstrating their growing importance to the company's financial health. Furthermore, anticipation is building for Apple's upcoming launch event on September 9th, where the company is expected to unveil a significant iPhone redesign and introduce deeper artificial intelligence integrations, aiming to re-energize consumer interest. These developments suggest that now might be an opportune time for investors to consider gaining exposure to AAPL stock. For those seeking to invest in Apple while mitigating the inherent risks of holding individual stocks, exchange-traded funds, ETFs, offer a compelling solution by providing diversified exposure. Investors interested in gaining indirect exposure to Apple stock can consider ETFs such as the Global X PureCap MSCI Information Technology ETF, GXBT, and the iShares US Technology ETF, IYW. The GXBT ETF, a recently launched fund established on July 22, 2025, provides market cap-weighted exposure to the U.S. information technology sector, mirroring the MSCI USA Information Technology Index. Consequently, major technology companies like NVIDIA, Microsoft, and Apple represent significant holdings within this ETF. Notably, Apple constitutes 18.29% of GXBT's total assets. The ETF currently has $16.4 million in assets under management, AUM, and an expense ratio of 0.15%. Since its inception, GXBT has delivered a return of 1.1%. According to TipRanks, GXBT holds a strong buy consensus rating, supported by 74 buy ratings and 11 hold ratings over the past 3 months, with an average price target implying an 11.01% upside potential. The IYW ETF, on the other hand, is a large-cap technology fund that tracks the Russell 1000 Technology RIC 22.545 capped index, offering exposure to the broader U.S. technology sector. It is designed for investors aiming for growth through innovation across software, hardware, semiconductors, and digital platforms. Apple represents a substantial 14% of IYW's total holdings. Beyond Apple, top holdings in the IYW ETF include NVIDIA, Meta Platforms, and Broadcom. The ETF boasts $22.84 billion in AUM and carries an expense ratio of 0.82%. Over the past 3 months, the IYW ETF has appreciated by 14.2%. Wall Street analysts maintain a strong buy consensus for the IYW ETF, with 115 buy ratings and 27 hold ratings among its 142 constituent stocks. The average price target for IYW suggests an 11.4% potential upside. These are just a few of the major shifts happening across the tech and investment landscapes. We've covered a lot of ground today, from personal finance to the future of streaming and writing tools. And that's a wrap on today's essential updates. We saw how Apple stock performed against the S&P 500, explored Paramount Plus' big plans for Star Trek with a new executive hire, discovered how Apple Notes now supports Markdown for better writing, and learned about smart ways to invest in Apple through ETFs. Don't forget to hit that like button if you found this valuable, subscribe for more deep dives, ring that notification bell so you're always in the know, drop a comment with your thoughts on these stories, and follow us on all social platforms for even more content. We'll catch you in the next one.